I have the same shirt.
Good morning, traders and investors. Welcome to Tuesday's edition of Benzinga's Pre-Market Prep, brought to you by Options House. Mighty Joe Young, how you doing this morning?
You know, I'm a little sad today, Joel.
How come, Joe?
Did you know that Harold Ramis passed away yesterday morning?
Yes, I did. I did see that. Good old Harold Ramis. You were probably too young to see Ghostbusters, huh?
Everybody has seen Ghostbusters, Joel, but I prefer Stripes actually
That
with
was
Bill Murray. And I just watched it the other day, and then obviously he was still around in a lot of Judd Apatow films as well. He had production credits and stuff like that, but it's too bad. Nobody really knew he was sick. He's gone too soon.
yeah, 69. 70 calls go off the board worthless there with Harold Ramis. Okay.
This is not a time when those market-related jokes are funny, Joel.
Okay.
Some of us are genuinely sad.
That was Egon, right?
That's right. That's
Egon.
right, Brent.
Hey.
You got it, buddy.
Okay, we got Snazzy Bazzy filling in again for Dennis. Kyle, how you
Who
doing
the,
this morning?
who the hell is Harold Ramis?
No, you didn't.
Oh,
Egon
y-
No,
from
you didn't.
Ghostbusters, the nerd.
I can't get past Bill Murray.
yeah.
Yeah, that's fine.
The
What about Aykroyd, though?
the Aunt Jemima
Okay, Aykroyd
treatment.
too. Aykroyd's good. I can concur with that.
Okay, I don't know if we have any female listeners, so to talk about the Aunt Jemima treatment from from that movie. But let's not digress. How you doing this morning, Kyle?
Great, great. I'm excited to jump in it today. I know you were just telling me about the S and P's, and we're looking at breakout or fake out this morning. Going to get into that gold, crude, and then jump into some earnings plays. The movers of the morning. Got a lot of great trading ideas and some crazy ratings changes from some banks today.
Yeah.
But let's start with the S&P 500 futures. Joel, what are you seeing?
Well, we had a scenario. Dennis and I were talking about it where the market was going to go and take out all that paper at the all-time high, 1846.50, and we took that out there, ran to buy stops, rallied it another 10 points, and everyone is piling in cash. Grandma's going and get the money out of her mattress and putting it in the market, and then boom, 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 we started to fall back. And we posted a close. I was looking for a close above 1846.50. We closed at 1846 even. That was right where the old high is, and now we are trading lower by 3.5 points. We got to get back up above 1846, or else this is a fake out. This is a scenario where everyone that wasn't in the market, it breaks out the new highs. Okay, I'm in. And, Dennis and I talk about the most amount of people getting punished right now. If you had a 200 or a 300 point down day, they would just crush some people that hopped into the market. So, and lo and behold, the 1846.75 held up as the after hours and pre market high. We're just kind of creeping down, and the first major level to take a look at is Monday's intraday low, 1837. That's a few points away from here.
So we got a potential fake out on the S&P 500 here. Joel, what the levels that we're looking at right now? If this crosses a threshold back down below what level are we
Oh,
looking at?
I think you got to give it some room on the downside here because you're going to have, you got a lot of people that shorted yesterday, and they're going to be like, oh my God, I'm up on my short for one day, so I'm going to want to cover. So you're going to have an incremental. I'm using 1830 on the downside. That's another 12 handles away from here. That was Monday's intraday low, so I'm not going to get, too carried away here until we get a close below 1830. But it's so important for the market after breaking out to new all-time highs by over 10 points. Man, it's got to get back up there and do it again. So perfect setup here. I know Dennis was looking for a long-term short if the S&Ps could rally back up to the 1850 handle, but right now that doesn't look like a possibility.
All right, Joel, let's move on to gold. We were looking at the chart earlier today, and we were looking at a potential double top in gold this morning.
Yeah, gold is hanging in there, rallying with the market, held up there yesterday. I just want to alert our traders just to two levels here. We've hit 38.40 in today's session, yesterday's high 39.20. Call that whole 13.40 level major resistance. Highest level for the contract. You got to go back to the end of October here. So low risk short here and letting it go above 13.40.
You said the last time was October that we saw that high.
Last time we traded 1342.80 on October 31st. Halloween is
Wow.
yeah, that's
Gold and the S&P just want to move together, I see.
yeah, that divergence there is it's just amazing here. And who are we talking to yesterday?
Tim.
Tim, yeah, and it's not going to hold up here. Something's going to give. So we'll see. We'll see what happens in that
Yeah,
gold
he
market
said the
today.
last time that the market, the gold market, the S&P 500, and the bond market all move together like this, one's bound to cave and drop out.
Yep, I agree. I agree.
All right, last but not least of our intro here is crude. And again, is this another breakout or fake out where we see these levels?
So, okay, let's go to the daily real quick here. And you had all those stubborn highs in the 103s. Well, lo and behold, yesterday rallies with the market, goes up above 103, gets to 103.45, which was 16 cents above the former high of the move. And then, as Dennis would say, kapooey. And we just settled near 103. What I like about the setup here is you had a 102.80 open, 102.84 high. Now, this is at the 6 p.m. open. Kyle, you're still here at the office here doing stuff, but that's when the next trading day starts. And if you were shorting that crude off the open, 102.80 open, you took no heat. And I'd like to maybe I can put this up on another day with the levels and stuff. But you had the daily pivot right at 102.82. You had the close right at that area, and then you had three of the last four closes right at the 102.80 area. So I guess the term that they use is confluence. There was a lot of confluence there. It didn't hold. Now we're trading below Friday's low. We're in a little bit of a vacuum area here. Really, no major support down for another buck and a half, but don't think we'll see that $100 level today in crude.
All right, let's move on to earnings. Earnings last night, Tenet Healthcare THC had a beat 49 cents per share, beating the consensus estimate of 37 cents. I think revenues were 3.89 billion versus 3.87 billion. Stock's trading down this morning though, isn't it?
Yeah, they're giving it the old don't compare. Brent, can you give us any details on that?
For that bottom line figure, I didn't check out the adjustments there, but there also was some guidance that you guys didn't take a look at. Q1 adjusted EBITDA in the range of 350 to 400 million, and then the fiscal year 14 adjusted EBITDA guidance was in the range of 1.8 to 1.9 billion. Looks like the street is giving a little more credence to that guidance.
Okay, well, they're pounding it. Got down to 46 on that initial pop. I got a little back up to 46.50. Everyone leaning the wrong way in this one. Closed it right near the multi-year highs here up above the $40 level. Now we're coming down here on the daily chart. Besides the pre-market low here, you're going to have to take a look to find it 46. You had a couple lows going back a few trading sessions ago at 45.85 and 46.08. That was back on the 21st and 19th. So keep an eye on that $46 level. If not, you could be easily trading in the lower 45s. Coming back on the upside, only 20 cents away to fill the gap from yesterday at 46.70. So you gap players might want to get an offer out there at 46.70.
All right, moving on to a stock we touched on yesterday, Solar City back into our radar. Operating metrics, earnings delayed, and account changes due to recent acquisition. What are we seeing on Solar City, and are there any complementary plays here, Joel?
Well, first of all, operating metrics. I mean, is that just how much kilowattage or whatever they're kicking out? Man, I'm a rocket scientist here. Yeah. So they came out with those metrics, and I guess they weren't good because they initially took the stock down really hard off that. The algos took it down under $74. Pre-market low 73. Keep an eye on that.
Wow.
Yeah. And then
Look at that candle.
Yeah, and then it roared all the way back to 79, and you hit a little resistance there. Boy, I'll just call the 76 level because that splits those two areas. I'd call that a swing level there. below 76. We could be back heading to the lows. I mean, if you look at the dailies on this one, I mean, you've had a nice run up. Then you've had multiple lows at the $75 area, which we did take out in the pre-market. I guess I just long term, if I'm holding on to this thing, I wouldn't like to see it below 75. And then, Brent, you got something you want to add there on the Solar City? Nope. Okay. And then the First Solar had made a nice move here from the $48 level. Let's see if it's not really reacting here. Let's just keep an eye on First Solar here. The low from yesterday in FSLR. Let's just check that out if they're going to hit both of them. Yesterday's low, 56.37. We're still trading away. These two stocks have kind of gone in opposite direction. Goldman did the old upgrade trick, downgrade trick, and downgraded the First Solar up to Solar City. But looks like Solar City's gaining some ground back.
I was just getting ready to cut you off before you guys went to the next earnings. So if everything's done with the solar talk there.
Go ahead, man.
Yeah, okay. So we did have just one of the bigger retail reports out. Macy's just hitting the wire right at 8. That was Q4 adjusted EPS 231. The street was looking for 217. Sales were 9.2 billion, and the street was at. Let me pull this up real quick. The street was at 9.28 billion. So we beat on the Macy's beat on the bottom line. They missed on the top line, and it looks like the street is hitting that top line number. We got the stock trading down 52, 56 last trade I see.
Brent, what was the bottom line? 231.
231. Yeah, let me get you the gap figure though. The gap figure was 216, and the adjusted figure was 231. So you want to use that adjusted figure. It was about 14 cents better than expected.
Gotcha.
Bottom line is it's traded down 73 cents, and it was even trading lower here. It got to 51.30. A little bit of volume traded there too. So keep an eye. 51.30 just got to bounce back up to the 52.25 level.
And Joel, it was actually exactly what we had our guest Tim Elvin on talking about yesterday. Stocks beating on the bottom line, but keep missing on the top line.
Yep, that's been a little bit of a trend here. Macy's, let's just go to the dailies here. You got the 51.30 for the spike low for you bears to keep an eye on, or people were looking for a place to initiate along. What I'm looking at this stock is this consolidation between 53 and 54, 53 and 54. Now you're below 53 by a substantial amount here. So any kind of rally back up in the high 52s, I expect some major, major resistance. Coming back on the downside, that 51.30 low coincides with your low on February 6th at 51.43. So there's a good level. Keep an eye on the downside. Below that, we're trading $50.
All right, let's keep on moving on. Some earnings today. We have Home Depot, 73 cents versus 68. It looks like profit went down from 1.01 billion versus the 1.02 billion. We also have their counterpart, LOW, increase in quantity dividend by 21%, 39 cents versus 47 cents on the street. What are we looking at in this sector, Joel? How are Home Depot and Lowe's doing today?
Do you shop at Home Depot?
I do shop at Home Depot. For some reason, I can't do Lowe's. And I don't know why. I don't know if it's psychological or my dad took me to Home Depot. I'm not sure.
Are you like one of those guys that like pulls your car up like to the to the unload place, and then you walk out with those big 2x4s and like the doors and stuff like that? Or are you like one of the guys that pulls up at the pickup and you walk out with like a screwdriver and a hammer?
If our show's demographic is beautiful women, single, looking for a young strapping man, then yes, I'm walking out there with the big 2x4s and not the 5-in-1 toolkit.
I don't know. Whenever I go there, I mean, I don't know how they're making all this money, because I spend like $41.87, and then I get home and Lisa says you bought the wrong light bulbs. So they're good about taking stuff back.
I think the answer is the hot dogs.
Oh,
the hot dogs.
The hot dogs is where Home Depot's making the loot.
Yep. No seating available though at the one on Northwestern, but they initially spiked this thing to $80. Boom, boom, boom. Right off the hop, they took it to 80 even. pulled back to 78.80. So pretty good volatility here in Home Depot. You had a high at 80, or excuse me, at 80 even and 80.30 back at January 23rd, 24th. That keeps it up a couple sticks here. If it does open up around that $80 level and then goes up like to 80.20 and then comes back down through 80, I'd get out of the way here. I think that could be, has to hold 80 to keep this momentum going. Had a real hard fall from over the 81 level. So there's a lot of people they're going to be looking to, on this recent decline here to get stock back. So we'll see what happens today at the $80 level. And let's take a look at Lowe's. See if you have a sympathy play here in Lowe's. Getting a little bit of a spike here in the pre-market, trading up at 47.57. Let's see if we can find a resistance level that corresponds with that. Not really, but I would look at the triple top here, 48.22 to 32. Those were the highs at the end of January. That's your major resistance point for Lowe's.
All right, moving on here. We have Steve Madden, SHOO, reported 63 cents versus street's estimates of 54 cents. Revenues at 542.9. Guides a little bit lower for the next year, 205 to the 215 range. What are we seeing in Steve Madden? This kind of seems like your kind of shoe too, Joel.
Oh, yeah. Really? Aren't they chick shoes? Aren't they really expensive?
No. I think it's both. I think it used to be. Isn't Steve Madden the company that IPO'd in Wolf on Wall Street movie?
Yes, that is right, sir.
It is right. Look at that. That could have been a trivia question today, Joe. I'm sorry about taking that answer away from you. No, it used. I think it came out as high-end chick shoes, but it goes all both genders now, Joel. They're not discriminatory.
Designs, sources, markets, and sells named brand and private label footwear for men, women, children, and the name brand and private label fashion handbags and accessories also.
Is his dad John Madden?
Okay. Oh, Joel.
not much of a reaction here in the pre-market. What's interesting about this stock here is you had a breakdown under the $31 level. Now we've come all the way back up to fill this gap here. You had a low at 33, or excuse me, you had a low at 35.23. Yesterday's high 35.36. I'd call that area major resistance. It gets through there. You see it's wide open to the $36 level. Coming back on the downside, 34.70, yesterday's low. Get me out if it takes out 34.70. There's nothing really in the book until you get in the lower 33s. You had a triple bottom from 33.24 on Friday or Thursday and Friday, and then a low on Wednesday at 33.39.
BMO, Bank of Montreal, reported 161 versus 156. Joel, you know I love the banking sector. What are we looking at BMO in the pre-market?
And that's in Canadian dollars here. Initially took it down to this kind of interesting chart here because you've taken it down a little bit and it's just sitting there at 65.21. Really very little action here. Let's see if we can get any kind of read on this thing. Yeah, no one hands off here. Let's see. Let's take a look at the dailies. Had a nice run up here. Found a lot of resistance just under 66 here. Yesterday's high, 65. Let's see what yesterday's high was. Yesterday's high, 65.87. Another high at 65.74. So those upper 66s. Good resistance here in BMO. Coming back on the downside for the issue. Yesterday's low was, tight range in this thing yesterday. Yesterday's low, 65.33. So I maybe play a breakout there. Quiet day for the stock, and our market was pretty volatile. I think under 65.33, you might be getting down into the lower 65s.
What is the Canadian dollar exchange right now? Do you know?
I do not know. I don't know. I know it's been rallying. I know Dennis complains about it because he has to shift the money around, but I do not have a read on that.
All right. Moving on.
It looks like it is. I see U.S. dollars to Canadian dollars it's almost $1.11.
Ooh, I remember when it used to be $1.75.
Yeah,
Go
that's great.
over across the border to Windsor and have a great dinner for half the
$10.
price. It was great.
Right.
Okay,
Yeah,
moving
but
on.
just moving on here. There's never any pre-market trading in Canadian banks because Toronto does not have pre-market trading.
Oh, interesting.
So I guess we don't have many Canadian listeners there for pre-market prep.
Dennis is so lonely. All right, moving on to some more earnings plays this morning. Toll Brothers reports 25 cents versus 19 cents. Revenues of 643.7 versus 693.7 versus 693.9. What are we seeing in the housing sector? We were just talking about them yesterday as well.
Spike up. Really in two different bars. So you got a seller here at 39. Nice round number of 39. Recent high of the move in yesterday's trading was 38.71. So we've coming off hard off the $39 level. I'd look anywhere near from 38.71 to 39. Maybe a big seller at the point that's trying to sell in the pre-market. Coming back on the downside here. Pre-market low is right around the close, double close area, 38.19 Friday, 38.34 yesterday. So needs to get back above that 38.34 and hold the challenge at $39 level. If not, you're looking at this thing under $38.
All right, and then are you seeing any sympathy plays? I mean, we got KB Homes, RYL. There's a ton of companies in this space. Do you see? I mean, are we looking at any correlations there?
I mean, there's not a lot of trading here in the Toll Brothers, so they really don't have a lot to key off here. Let's look at Ryland here. Ryland trading flat. I would just have our traders, if you're looking at this thing, just keep an eye on that 42.12 to 23 area. You've had like 3 or 4 lows in that area, and then also a low right at 42. So you get this thing under $42. There's a lot of air. Holds 42. You can expect it to trade back up in yesterday's range. Yesterday's high 43.54.
And whenever we're talking about the home builders, I always recommend traders take a look at the XHB. That is the Spider S&P Home Builder ETF. Probably has no action right now, but it's one to watch if you want a nice broad picture throughout the trading session.
Yeah, let's just pull that up for our listeners if they like to trade the ETF. It's kind of slow coming up here. But what else are we looking at today, Kyle?
A little hometown hero, my favorite pizza, Domino's DPZ reporting 76 cents for 78 cents. Revenue estimate 563.39. Joel, tell me good news. I love this company.
Yeah, you like the pizzas, or are you into the other menus?
Have you ever ordered Domino's pizza online? It's one of the best experiences you'll ever go
Pretty
through
awesome.
ordering online food.
It really
you
is.
can get like the pasta bowls. You ever had the pasta bowls?
Nope, I haven't.
They're delicious.
The online ordering though, it tells you the person that's making your pizza. It gives you like a progress check as the pizza's being
Like
made.
the pizza's being made.
Pizza's
the
in the oven.
The pizza's being
Pizza's
popped.
out of the oven. Yeah, it's pretty unreal.
Yeah, and they show a person blowing their nose and then making the pizza. There's their video cam or something on
Dropping
that.
it on the floor. Now that would be really
Jeez.
legit.
Cheezo Pete.
New all-time high for Domino's Pizza
Woohoo!
in the pre-market here. We just hit $76, 76.01. Someone throwing in the towel there saying, just get me out. I don't want to be short anymore. 76, the only level that you had. I mean, this stock is just been on a major run. I don't even know what to say about this. 76 is, I don't even know if I can make a bet on Dennis on this one. I mean, this thing has just been incredible. Only trades at 76. I guess if you're looking for a Q on this thing, off the open, it opens at some ridiculous price, like 77 or something like that, and then doesn't trade a nickel or a dime higher pretty quickly, I'd get out. You need to get down to 74.84. That's the former all-time high to fill the gap.
Joel, these are all-time highs, aren't they?
Yes, they are. They are.
Wow.
And
I'm looking.
Yeah, this stock did like a 3 for 2 or something a while ago too. So it'd be like $100 stock.
Wow. I mean, this thing has ripped from a low of $3 in 2008. That's incredible.
Yeah,
All right, moving on to some ratings changes now. Everybody, we already had J. Dot come into the chat this morning. Anyone else that wants to talk about some tickers, make sure to just pipe them in there. We'll go over the levels before we have One of my favorite options guys, Nic Chahine from Creating
Yeah.
Income with Option Spreads at 8:35 in 10 minutes. But Joel, you were going crazy. I don't want to say you were cussing, but you were having a fit this morning. Morgan Stanley boosts Tesla's target from, you ready? 153 to 320, over doubling it. Tesla moving
Woo!
pretty well this morning, but this is ridiculous, Joel.
I mean, what I just don't know. I'd like to be the math. I'd like to see the math on this. Okay, well, let's see. They sold 9 more cars, and they're selling them in China. Unbelievable here. We did. It's kind of interesting level here. I wish I could go back farther on this. We hit 234.01 here in the pre-market. And the day that they had earnings, a couple days ago, I remember they spiked up to 235. So I guess it is resistance here, 234 to 235. So we'll keep an eye on that. I mean, you got a long ways to go to fill the gap from yesterday, 218.36. So I'm just keeping an eye, 234, 235. And then, of course, you might want to get your order out at 319.99 in case it hits that price target today. And I'm still lamenting the weekly 130 calls I had like 2 months ago that I think I made like, a couple $100 on. But, yeah. Incredible move for Tesla. There's nothing else you can say. Keep an eye on 234, 235.
I'm just pulling up the note right here, and if you guys were upset with the 320 target, well, they set a bull case target of just $500. That's if that's if everything goes correct with the economies of scale, specifically on the battery. I see, let's see, the target is based on the commercialization of the Model X, the Model S, and the next generation with combined volume of over 1 million units by 2028. So that is exactly how this analyst got to that target, Joel.
Yeah, I mean that's. They're smarter than me. I mean, the only problem I have with this, okay, is if what if you're fought by Morgan Stanley broker? Okay, get me out at 152. Okay, so you're already, you're out. You're out a long time ago.
Mm-hmm.
Right.
And now they changed it to 320, and you're back in at 217.
Yeah. Now I wonder how many Morgan Stanley brokers are convincing that. Yeah, we got out at 152, but I've decided now at 217.
This thing's a buy.
This thing's a buy. I'd be like, slam, get me, what are those for, ACAP me out of here, man. Send me over to Options House. This is what I would say to him.
Oh, Tesla. Joe, we're going to deviate, and I got a couple of tickers here in the chat from
Okay.
GGB and our man JH3. We talked about RFMD yesterday. We talked the buyout is $9.75. He asked, why is it only $7 today? Can we look at the chart and see what we're seeing on the levels?
Was it Triquint? Wait, wasn't Triquint the one that was?
It was. I believe that it was valued at Triquint shares, 975 Triquint shares. Let's see. It doesn't exactly look right either. You know what it might be? It might be the combined company, 975. I don't know if it was directly based on the RF price.
Okay, so we don't have a great answer on that one, unfortunately. Just stick with the ratio on that. Looking at Triquint from yesterday, gapped up, traded in a pretty good range here. Made a high at 1184, low 1084, closed up near the high. So those are the parameters you have. Just trade them off that ratio.
I'm gonna guess it's the ratio on it, the two of them.
You know what? I'm looking at the release right now. It says that the merger represents an implied price of $9.73.
Yeah, so that with the two companies together.
Yep.
All right, the GGB, that's what it is right there. The two companies together. That's why you're seeing RFMD trade like that. JH3 username just asked, what do you think about the Verizon chart yesterday? And we'll take at it pre-market today, Joel.
Well, there was a lot of shenanigans going on with that stock. With the Vodafone. The Vodafone merger acquisition kind of thing, and they came out. What I noticed about this thing yesterday with the Verizon is like they came out with a pretty upbeat guidance, and I think someone got an upturn on them. and it didn't react at all. It didn't even get to the close. I was looking at early. Opened up at 47.02, went to 47.20, which was 7 cents below the close. The close is a good number, especially when you have the low right there. So the street did not like what they heard. Must have been a huge sell imbalance on it, and it's following through here because it gapped down on the open 46.23 low. We've traded under $46 here, I believe, to 45.96. So I'd keep an eye on that. If that 45.96 does not hold, the lows, this is all the way back down to the February lows, double bottom, 45.45 and 45.56. So 45.50, a huge level in Verizon. Now you have to double check on that, but I think there was a big sell imbalance due to the Vodafone acquisition or merger of the two companies, but I don't expect this thing to rip right back up to 47. In fact, this chart looks terrible.
Wow, it does. It absolutely does. Joel, we're going to finish up with some rating changes and see if we can get to a couple of the movers here before we have on Nick from the Creating Income with Option Spreads. JPM, the auto sector initiation. Did you see some plays with that this morning? Toyota, Honda, TM, AHMC. Toyota got a neutral rating, and Honda is at overweight.
Yeah, starting out with the intraday chart, not getting a lot of activity here in the Toyota. Things just kind of range bound here for the last couple days here. Trading, let's see what kind of the range has been in Toyota here. Over the last few days, last 8-10 trading days, traded between 114.86 and 117.79. So kind of looking for a little breakout or breakdown below that. And then Honda Motors Corp. Let's see how that's doing. HMC. Foreign cars here.
Yeah, so I was just gonna point out was the foreign cars, you didn't get your Fords and GMs there.
This stock is not. I mean, it's trading near the lows of the move here. Triple bottom, 35.42 to 35.61 area. So if you're looking for, a swing trade here, you have a identifiable stop there. JH3, you're going back to this Verizon. I guess there was a lot of extra shares distributed. I'm not sure what price it was, or if people got it from the close on Friday, or excuse me, on the close from yesterday. If they did, I would use that closing price yesterday as just a huge level, a huge swing level. Because if they just want to dump the shares, the mark is at the close. That's going to be the area. They chew through that stock, you can get back up near 47. But that could find out the actual price where if it's issued, the shares are issued on the close, and that 46.23 is going to be a huge number.
All right, and then last but not least, for the ratings this morning, Joel, you were bringing up Goldman Sachs and silver to sell from, or initiated from a sell, not initiated, but from a sell to a neutral. What was the ticker on that?
My writing's pretty bad here, huh? Is it PAAS, Pan American Silver?
There you go.
Okay. Pass. Yeah, it's kind of interesting call here. As the gold miners and silver stocks have made a nice run up here, they are just saying get out, and I kind of like that. You got a profit, things moving up, old time high. Take it, baby, and they're knocking it down here. Spotty trades down in the 14 handle. Keep an eye on 1481 here, and that was the low from Friday. Just going back when you're looking at the stocks like Verizon, if the market is breaking up, and making going to have a year like we did last year, who wants to own a stock like Verizon? When the market is going up 25-30% a year, it's more of safety. Now, if the market starts to go down and we start to roll over from this level, then people will go into stocks like Verizon and the AT&T because of the dividend. And as of right now, we're seeing a little bit of a sell imbalance in Verizon. So keep an eye on that close 46.23.
All right, we will be right back, taking a quick break, and then when we come back, Nic Chahine on creating income with option spreads. Going to be talking about what he's looking at, some plays that him and his newsletter community are partaking in. Nick is a great trader. Hold tight. We'll be with you in a second.
Welcome back, traders and investors. We're with Nic Chahine, creating income with credit spreads. Up bright and early. How you doing, Nick?
I'm doing awesome. How about you guys? I've been listening to you. A great show this morning. You're touching on a whole bunch of stuff, and trying to keep up with you is a little challenge here. But I'm up to my third cup of coffee.
Well, I'm along for the ride here, Nick. Now, Nick, I'm obviously you're on Markify running a newsletter called Create Income with Option Spreads, and I follow you extremely closely. I love one of the pieces you come out with every day, your afternoon tea. I had some really great stocks in it yesterday, including a lot of the Momo stocks. But um, I want to start off with just a couple of the plays that you're looking at right now. And yesterday, I know I saw a piece from you talking about we're looking for confirmation on what the market's doing right now. Can you kind of explain your process of looking at the macro trend and then diving into some stocks?
Sure, definitely. But before I go anywhere, you guys were talking about Tesla, right? And you said
Sure.
math. The math doesn't work out. There's no math. It's faith. So they should probably fold it under the fiat, right? Instead of the Tesla, because it's faith, like the currency. You got to have faith in the company, and I don't have the same faith they do. Like a lot of people are puzzled at these valuations. It's just a car company, after all said and done. But hey, if it's running, I'm not standing in front of it. So just let it go.
Million units by 2028. Are you gonna
Yeah.
get a Tesla, Nick?
No, it's not a car. I'm a driver. I mean, my handle on Twitter is Racer Nick. I can't drive a car that looks like a Starship Enterprise. That's not a car. It looks great. It's just not for me.
All right, moving on to some of your current stocks that you would be playing. Are you playing in Tesla, or you say you're getting out of the
Sure.
way?
No, I'm out of the way. I did play it on the long side a while back, just via options. I don't have the faith to throw big money at it, so I just buy some options and go with the flow. But as far as plays, I want to pick up on last week's conversation I had with the guys last Tuesday, and we talked a few things, and I mentioned that I was challenging Google. And I did, and I won last week, so I am doing it again this week. And it was based on open interest, which is another part of the conversation.
Yep.
I know you guys said that open interest is not a foolproof strategy. Absolutely, it's not. But it does give me something to shoot for. So if you look at something's open interest and it tells you that the market is more likely to punish those option holders, then it gives you a target where you're comfortable putting a credit cost spread, for example, which means you're selling some risk or premium at a certain level. So last week I played Google and I tried to range it between 1225 and I think 1175 on the downside. So I did an iron condor on Google last week. Oh, the blasphemy! Somebody said, I'm not shorting your. I don't want it to go down, Jay. I just want it to hold where it is. I don't want it to go anywhere.
Could you explain
Sorry
the
about
could,
that.
could, could you explain that iron condor, please, for our listeners?
Yes, yes. Iron Condor, plainly put, in plain simple English, is I'd say Google is not going higher than say 1240 this week or lower than 1167 or 68. So if I'm comfortable with that range, then I'll sell premium, which means I will go short it at that level and go long it at the lower level. So I'll say, okay, if it drops down to 1168, I'm losing a little bit of money. If it goes beyond 1240, I'll lose a little money. And actually, how I put the trade on is I sell the credit call spread. So you've heard of options. You can buy a call at 1240, say. You can also sell a call at 1240.
Correct.
But if you sell a call, then your risk is unlimited to the upside. If Google say jumps to 1300 tomorrow, you're losing anything between 1240 and 1300 times the number of calls. So what I do is I sell a spread instead of selling the call. I sell the call, but I also buy one just above it to limit my risk. So I take a small risk up at 1240, and I collect a premium. If I'm right and Google is below that by the end of the week, I keep that premium. I'm kind of selling insurance, and somebody else is buying the insurance.
Okay.
So the Iron Condor is
In your risk is limited to what you sell that spread to. So if you sold it at 250, then you're risking 250.
I risk the maximum spread minus what I collect. So
Okay.
if the maximum spread is $2.50 and I collected 50 cents, I'm risking $2
Okay.
times the number of contracts times 100.
Okay. And then what did you
So
do on the downside?
on the downside, I sold a put at 1167 and a half, and I buy a put behind lower by $2.50.
Okay.
So the Iron Condor is 250 wide, $2.50 wide on the top and the bottom. So the maximum risk is still 250 because I can't lose on both legs, right? It can either go up or down, minus the total premium I collected from the top and the bottom. So I'm risking under $2 for such a wide margin, plus or minus 3% on a week that should be somewhat tame.
So Nick, the question that I get really often is, all right, the strategy is set at that, but how do you pick that stock, or what is the strategy to find something to trade that Iron Condor on?
Well, Kyle, you've been on so many presentations with me. Is that the one thing I always say? You have to have. Renster doesn't like our talk. You have to have a watch list. And you develop a watch list over years of trading, and then you watch it, not just see it. You have to watch it. By that I mean you have to go through it every day and see the highs and the lows and the flow and the events. I don't play events. If Google had an event this week, I'm out. There's no way I put this trade on an event. Case in point, what happened a couple of earnings ago when it shot up $100 and nobody saw it coming. Right, so you play those with lotto plays, which is what I wanted to talk to also just briefly.
Okay.
So you have to have a watch list, and you have to work it hard. I mean, it's not easy. If it were easy, everybody would be throwing darts and making money.
I would just really want to point out something here to our listeners here. And even though Nick is, he's selling options here, he has a risk reward in here. He always protects himself. He never leaves him I mean, he will take a loss on a trade just like every trader. But hey, first of all, he avoids trading these issues going into a news event where something can happen. But then, the black swan event, which gets so many traders. Traders right now, they're selling puts for a teeny, selling them cheap, collecting income. They're going to come in one day, and their accounts are going to be wiped out. And all the small incremental amounts they made. But Nick doesn't do that. He has a defined loss. And even though you're selling the options and selling the spread, he limits your risk. And that's the most important thing about trading.
I'm so glad you said that. I'm the guy. I'm so conservative. It's not even funny, and I do this for a living. People don't get that. They say you're lying. You can't be this conservative and be doing this for a living. If the market goes to zero, I know exactly how much I'm losing, and I can sleep. And if the market goes to a million, same thing. If you have a portfolio where if the market goes to zero, at the thought of that makes you throw up a little bit. It's too much risk. And I don't understand selling naked puts or calls because, like you just said, the risk is so big, and yeah, I'll take a little bit less of money, and I'll sleep well at night. Thank you very much. So
Yep.
I'm the guy driving down the street, nicely paved street. I'm looking for potholes, so I can't do naked.
Yeah, well, good thing you're not coming out to visit us because there's a lot going on. So, what about what are any lotto plays? I mean, we're coming out of earnings season
Yeah.
here. Yeah, let's talk about those.
Yeah, usually lotto plays. I would say, "What the heck is a lotto play?" Well, you buy a lotto ticket, your odds are a zillion to one to win something, right? So on lotto plays, you buy if Priceline is announcing earnings, for example, ahead of an event, and you say, okay, I can't put the credit spreads ahead of an event. I never do that ever. So what I do is I go with the flow. I'm not smarter than everybody, so I'll see what everybody's lined up, and if it's something I somewhat agree with or don't disagree with, I'll throw a few calls out there. I'll buy a call spread. The thing I do, I sell call spreads. I'll buy a call spread, and I don't buy it. I can either buy it way out of the money and hope for a giant bang, or I'll just buy it at the money and hope to double my money. And I'll just buy a ticket. It's $200, whatever it is, one lot, two lot, whatever you want, and then it goes from it's a coin flip really. So 50% chance on the lotto ticket is pretty darn good for a chance to double your money. That's just for fun. You don't do it when it's your nest egg. You do it when you want to participate. The other way I do lotto, I did it last Friday, and I wanted to mention that it was Priceline. Everybody's, how are you going to play Priceline? I wanted to buy a call spread, and a lot of my members did, but instead I decided to opt out. And at the open, I sold an iron condor at ridiculous. It was like 1270 or 13. What the heck is it now? 1370 on Priceline, and on the low side, when it announced, it gave me two numbers. It bottomed and it
Yep.
peaked, right? So I take those two numbers and I step out a little bit further from them, and I sold an iron condor there. So I sold one at 1370, and so 1370 to risk, and then capped it at 1375, and then one at I want to say 1285 and 1280. So I collected like 30 cents at the open, and as soon as like an hour later, those things were pennies. So it was 30 cents collected in 3 hours. It was just ridiculous. So I made my lotto ticket be like somebody gave me a peek at the numbers. Instead of playing ahead of the event, I sold the premiums when they were wacky. I mean, they were crazy at the open.
Right.
So
Yep.
you
Pumped up
can do it
volatility.
multiple ways.
Yeah, I just want to another thing here is we're gonna ask you a few things on your watch list, but when when I try and play some of these wacky options and stuff, and what I do, and I've made some good calls and some bad calls, but when I trade in these volatile stocks, I'll make a good call on something, but I don't really have, it's hard to have a target on these things, so they're so volatile. So I think the next time when I'm going to look at something, if I think, a Tesla could go to 250 or whatever, if I buy a call spread at $1.30, $5 apart, I know what I'm risking. I know what I'm making. So there doesn't have to be, that trepidation of, oh man, is this the top? And you wanna, and if you're only playing a couple calls, it's not, not trading large positions. It's really hard, to get out. So at least you're going in with a defined risk, and then what your target is. And I know you said you don't let the things go the way. You leave some money for other people, but at least you got a target on the upside. And just to close things out, could you just give us a couple other stocks on your watch list, things you like to watch and trade?
Sure. Definitely. Also last week, that falls well right here. I told you about LinkedIn. and I said I'm eyeballing it. I said stay out when it went down and down again and down again, and I was hoping to catch the bottom. And I said I like it at 180, but it was just $5 away. And sure enough, it went green on a red day, and when VIX was up 8%, so I knew I may have missed my bottom chance. Today it's going to be up again because it had some news on some Chinese site in Simplified Chinese or something like that. So I may have missed the bottom on LinkedIn, but that's one I trade on credit put spreads on drawbacks. I don't try to short it because it's one of Momo's. It's easier to actually go along it. So yeah, LinkedIn I look at that way. Any high dollar stock usually offers
Okay.
good premium.
Okay. All right, Nick, thanks a lot for coming on again. Once again, we get a good education here in the options market, selling credit spreads. People should definitely take a look at your product on MarketFi. Have a good trading day, and love to have you on again next week.
Thanks, guys.
See you, Nick. Hey, Joel, I got a question. So he said something at the end there that you hear quite often, and I don't think everyone understands going green on a red day. Can you correlate that to the levels? I mean, when a stock does that and you're looking at the bounce off a certain level, that's actually a stronger indicator than if it was green on a green day, right?
Yeah, and that's just going back here. And remember when the market was bottom? We had that big sell-off in beginning of February, and Apple was going along with it. Well, you have this day here. I believe it was February 2nd. Here, let me pull up the exact day. February 2nd, you had the issue got down to 493. Well, that was what on January 31st. It went down and made its low. So it was a little bit ahead of the market. But then when the S&Ps a few days later were making their lows for the move, that stock was higher. It was back above 500. So it showed excellent relative strength. And then when the market took off, then Apple took off with it. So there's there's when you're talking about, relative strength, and it also can happen, on the downside if the market's rallying, and your stock isn't just going, it's going nowhere. And that's not a good thing because if the market turns around, it's a high beta stock, it starts to go down, your stock may, multiply the move on the downside.
All right, we got a few more or 8 more minutes until our next guest, Gil Morales, is on from the Gilmo Report. He's going to be on at 9 a.m. today, the Chief Market Strategist at William O'Neill. But before we do that, it doesn't matter if you like him, hate him, agree with him, or want to throw the remote to the TV. Kramer's Momo stocks, you must take a look at them. We have Priceline, Solar City, SSYS, UA, Yelp. Joel, do we want to pull up any of these? We got any good ideas from Kramer's Momo stocks?
Well, let's just recap this triple D from yesterday. Got a downgrade. I think it was, or was it a price objective change there from whatchamacallit, from Bank America, and they hit the thing pretty good, but it came back up on the day, didn't lose a whole lot. When I'm looking at this one, and this is one of my favorite tricks, is when you have a move here from under $55, 54.63, then you had a rally up to 83. So basically, what did you have there? You had not quite a 30-point move, 28-point move. Take half of that, 14, add that to the 55. I like to see this. If I'm waiting to buy this thing cheap on a pullback, love to see this thing get back to $70 here. That would be half of this move, and then perhaps get a little retracement, and you get another bump up. So bringing that one up, but this SSYS seems to be the best in breed of these stocks. Do I have it right? SSYS? Yes. I usually get that wrong. This is basically up near its highs, and it hasn't, all the bad news that has come out in the sector. The thing is really not that far away from its all-time high of 138.10. Made a low yesterday at 123.82. That was 50 cents within the low that you had on the 19th. You got a nice pop back of it. Minor resistance at yesterday's high, 127, and then you get up closer to the 129 level.
All right, we have our own Brent coming in with a ticker request here, Joel. DKS, Dick's Sporting
He's got
Goods.
some news on that.
I do.
Uh-oh.
Guess what happened, Kyle?
What?
The man, the myth, the legend, Sazi upgrading dicks this morning.
Our boy Brian Sazi from Bellis Capital quickly becoming a powerhouse in
That's
this
right.
space for ratings. What did he upgrade it on?
He had a sell rating on it, so it's not exactly the most convicted upgrade, but he upgraded from sell to hold, boosted the price target from $46 to $54. Let me see. He said he's not overly enthusiastic given relative and absolute valuation considerations in a retail sector which is undergoing fundamental change that are placing pressure on average unit retail prices.
You think that any of these retail stores have Brian Sazi's face just on
Don't talk
software
to him.
recognition, and they don't allow him to bring his cell phone or a camera into the
Oh
actual
man,
store?
they're like scanning faces as they enter the door. They're like, Sazi alert, alarms go off.
For anyone that doesn't know, this man goes old school channel checking, taking pictures of back offices and storage rooms, checking for any of these stores. I mean, all the Sears scandal that came out, he was all over the place when all the Sears stores were a complete mess. So Sazi's a great analyst to check if you're trading retail stocks for any of the news, or and his research is pretty airtight.
You guys are probably too young to remember, but there used to be a Smith Barney commercial, and they had this old guy on. I can't think of what his name is, and he would say, "We make money the old-fashioned way. We earn it." And that's. Do you remember that, Kyle? Do you guys remember
No.
that? Come
No.
on, bail me out here, Joe. Where's Joe? What was that
Nope.
guy's name?
You say
Sorry,
we're
Joel.
you say we're
I-
too young for everything.
Everything.
Joel, every
yeah.
episode
We're
you
too
say
young
that.
to
You gotta
remember
bail me out.
Ghostbusters.
It's like, remember that Y2K thing? Ah, you guys are probably too young.
Hey, do you want my Y2K story?
No.
I got a great,
No,
yes,
no,
yes,
no,
yes. This is a
no.
great story.
Oh,
Okay,
you're just in time for my mid-morning nap.
okay. We went down to Florida, and we were making the reservations and everything, and Lisa's like, "Well, there's all these flights on the first," and I'm like, "Okay, let's fly back on the first. It's Y2K." She's like, "Are you crazy? Who knows what's gonna happen?" So it was New Year's Eve. Boom, midnight. I got up. I picked up the phone. I flushed the toilet and ran the sink. And I said everything's okay. And they ended up canceling my flight. Okay, because no one wanted to fly that day, and it turned out Michigan was playing in the Orange Bowl against Alabama. So I ended up going down, scalping tickets. It was a great game. It went to quadruple overtime, and ended up getting to see that game and then flying back at like 6 o'clock in the morning the next day. So that's my Y2K story. You guys like that one?
That was a great one, Joel. Thank you so much for enlightening all of us.
Oh, okay, Joe. All right, go back to your meeting with Fernando. There's some opening imbalances here. 207K to sell in Verizon. Bank America, 115,000 to sell. GE, 100 grand to buy. Merck, 50K to sell. Goldman Sachs, 20K to sell. Just looking at the market though here, we rallied back from those morning lows of 1841. We're back at the close here. So if you're looking to short against that former all-time high here, we got a nice little pop up, 1846.75. That's a pre-market high. We'll keep an good level to keep an eye on here in early trading.
All right, folks, if you have any more stocks that you want us to look at some levels here, we're going to be having our next guest, Gil, from the Gilmore Report on in just a couple of minutes. Joel, JH3 said, haha, Joel gets no respect, I tell you. Yes, he does. He gets a ton of respect.
No, look at John Houseman. That was the guy's name, man. J. Dot and John, we make money the old-fashioned way.
Okay, we'll see there. You should have been asked in the chat, not us.
I love JH3 and J. Dot. They're my man. Okay. All right, we're going to take a quick break, and we're going to be back with Gil Morales. Welcome back, traders and investors. At the request of Violin Maker here in the chat room, we have Gil Morales on the Gilmo Report. Gil, how you doing today?
Great.
Okay, just give us a brief, background in the markets and your education.
Well, I'm a graduate of Stanford University, and I went to work for William O'Neill back in 1997 when he recruited me from Payne Weber, where I had been working as a top producing broker. Prior to that, I had started at Merrill Lynch in Beverly Hills, but I went to work for O'Neill where I was the chief market strategist, an internal portfolio manager running the firm's money. We didn't run client money, we just ran our own money. Vice president and manager of the Institutional Services Group, which was the group at O'Neill responsible for advising, at the time, over 600 institutional investors, and that would include some of the biggest, most successful hedge funds, mutual funds, pensions, bank trusts, etc. out there. So it was actually a good experience. I did that until 2005 and then went off on my own. Tried running a couple of funds, but I found that running other people's money really isn't my thing. I'm a trader. I made my fortune as a trader, trading my own money and trading O'Neill's money, which was like trading my own money, and have found that, having clients, all they do is whine and complain, and I'm much better off keeping my psychology basically untouched and uncontaminated by the psychology of others, namely clients. And so I just trade my own money now and author 2 websites, virtueofselfishinvesting.com, which is for short, selfishinvesting.com, and the Gilmo Report, which is a twice-weekly report that I write and give my thoughts on the market.
Okay, so just going back over the last 10 years here, you probably have had some favorite and least favorite markets. Could you just I mean, we've had a lot going on over the last 10 years here, and could you just touch on your favorite and least favorite markets in that time period?
Well, I really enjoyed the 2001 market, and I didn't enjoy what happened during 2001. But it was very interesting in my perspective because I was actually getting short the market in late July, early August of 2001. And of course, we know that about a month later we had 9/11. But what's very interesting is at the time you were already seeing a bear market taking hold, and a lot of stocks were setting up in short sale setups. And so I was just hitting those left and right, and I was basically fully short, about 150% short on 9/11. And then on that day, as everyone remembers, they shut the markets down for a week.
Oh, yeah.
And the next week, the market came down about 1,000 points on the Dow, and I was able to cover all my short positions and then shift to stocks like Lockheed Martin, for example, which I remained long well into 2002, even though the market topped in 2001 in January of 2002. We had a little bounce off the September lows in 2001, and you ran up, and then the market rolled over in January of 2002, but Lockheed kept on going higher. And so it was very gratifying to own a position in a stock that wasn't exactly a can slim type of stock, but it was playing on the what I call the big stock principle, in that institutional investors understood that the U.S. was going to a war footing, and so they had to be weighted in that area. The interesting thing is that a lot of defense stocks were also setting up in bases, believe it or not, just prior to 9/11. You sometimes have to wonder if the market's mind, the mass mind of the market, didn't know something ahead of time. So that was a very favorite market of mine. Another one was 2004, where I was long basically Apple and Google, and that was the first time that I employed a technique that we call a buyable gap up. A lot of times you'll see a stock gapping up hugely after earnings, and people won't go after it because it looks too high, but we actually studied these. My partner, Dr. Chris Katcher, who has a PhD in nuclear physics from Berkeley, has studied these, and came up with a very precise way of handling them as buy points. And they're actually, buyable gap ups are actually low-risk buy points, and they're aided by the fact that they have a contrarian component in that when people see something gap up, so an example would be Tesla the other day gapping up to around 210, 215 after earnings, and nobody's going to buy that, of course, because it's too high, but it's actually quite viable. And we actually were adding and buying into that move pretty heavily last week. And today you see the stock trading above 231, so it's going higher. Percentage-wise, it's only another 6%. But I used that on Apple for the first time, and that stock had went from about 43 when I jumped on about 350,000 shares of the stock right there. And by the end of the day, it was trading in the 90s, so it's a very gratifying move. The other stock was Google. where I was first able to use a a pattern that we call the IPO U-turn, where stock will come public, form a little U sort of shape over the next, say, 5 to 6 weeks or longer, and then turn around and break out and go higher. And so I had those two stocks, and I was up somewhere around 83%, I think, for that year. So it was a very, very gratifying year. My least favorite was 2009. And that was primarily because I was shorting the market and actually doing okay up until the March-April time frame. And at that time, I had lost a lot of faith in the stability of the financial system. And I really thought, having analyzed bank statements and financial statements, 10Qs, 10Ks, and whatnot, I realized that they're all basically insolvent. And so I was certain at the time that all of these things were going to zero, and that we would see at least a couple of the big money center banks, Citigroup, Morgan Stanley, Goldman Sachs, somebody, where you're going to see more of them go under. And so I remained short those for way too long and got hit on the short side. But the lesson that I learned from that was that shifting away from a technically based methodology, which is normally what I use, I was trying to get way too fundamental, and I missed the technical signals of a bottom during that period, and what was actually a great rally off the lows. And so I would have to say that's my least favorite, but there's a little twist there. I think it's my most favorite because I think I also learned a great deal from that particular period.
Going back to that 201, now you said you came in short, and I remember, I remember that day, trading day vividly. We opened up sharply lower, but there was like a patriotic rally that was just a rip-roaring rally, and I remember taking the longs and then flip it short on that. Did you cover that day, or is that you just kind of that?
On the actual 9/11 day? Well, they never opened the market on the day of 9/11.
Well, no, I meant the week later.
They opened it up a week later, and the market actually sold off for the next 4 to 5 days. And then once you got to the end of that week, the market had a really sharp rally. That might be what you're remembering from that point. And like you, flipping from short to long, that's exactly what I did right there. So it's almost like too perfect, and it's a strange feeling.
It's weird, it is.
An event like that. Pardon me?
I said it. I mean, when you're it's weird when you nail something like that to to be that right. You're kind of like thinking, that this can't happen. But yeah, those are some volatile times. But I mean, you work with Bill O'Neill here, okay? And so you learned.
Right, I worked with Bill for 8 years. Right.
Yeah, I mean, from one of the best. What's the most important trading lesson you learned when working with Bill?
Well, one of the things that finally struck me working with him was one day I remember him calling me up and he said, "Look at this AOL," and this was in '98, I believe, towards the end of '98. And AOL was having America Online was having a big move, and he says, "Yeah, that's we own a lot of that." He says, "That's a big stock," and it suddenly struck me, also being involved with advising these big institutions. It struck me that when you're in the market, you want to be involved in the big stocks, the stocks that institutions have to be weighted in, simply because they are the cutting edge of whatever is going on in the economy at that time. And examples today would be stocks like Tesla. They're at the cutting edge of what is really cutting edge technology, the electric car, and taking it to a new level. Netflix, which is taking the content, entertainment content to a new level with their service. Facebook, which is another thing altogether, social networking. Companies that are doing things that are central to whatever's happening in the economy at that point in time, and because of that, institutional investors have to be in those stocks, and those are the big stocks, and that's where you want to be. Jesse Livermore referred to those as the leading issues of the day. That's where you wanted to be, and he would say that if you couldn't make money in the leading issues of the day, then you're not going to make money in any particular market environment if you can't do that.
Okay, yeah, that's trading the big, the leaders and the big caps. That makes sense. So, tell us about the Gilmore report.
Well, I just write a couple times a week. I try to keep it relatively simple. It's designed for people who don't want too much noise. And basically, I outline twice a week what I'm seeing in the market and the state of leading stocks. I look at thematic drivers, fundamental drivers, and basically try to bring my nearly 25 years of experience to bear in assessing what's going on in the market for my readers. And I would say it's been very successful. I started in 2008, and we're still going strong. And on top of that, I have the other website, which is selfishinvesting.com, which is more of a real-time alerts service that I do with my colleague, Dr. Chris Ketcher. And we're letting people know when we see stocks that are having pocket pivots, which is a proprietary buy point that we use, as well as the viable gap-ups.
Is the pocket pivot, is that related to the traditional pivot point, or is it something do you extrapolate off
No,
that?
not really. A pocket pivot is it can either be an early entry point. So you'll actually see pocket pivots show up within a base or a consolidation. So it's giving you an early buy point within the base. And I remember picking these up, these sorts of buy points. I'd seen them intuitively, subconsciously, whatever you want to say, on the charts. But Dr. Ketcher, Chris, actually codified the whole system of what constitutes a valid pocket pivot. When you're seeing a stock, let's say it's in a base and it's moving tightly along, say, a 50-day moving average, sometimes maybe in a 10-day moving average, and it'll get really quiet, the volume will die down, and then you'll see a little pickup in volume. And if that volume is higher than the largest down volume over the prior 10 days, and the stock is moving up and off of the 10-day or the 50-day moving average, that will generally define a pocket pivot buy point. And so that gives you an early mover advantage versus buying breakouts. Because what I've noticed is that as people, giving credit to O'Neill, who came out, who was the first guy to really be able to print charts automatically on a plotter printer and have that information available. Back in the 60s, nobody had that at the time, so it was a big innovation. But today, everybody's got charts. Everybody sees breakouts. And I think breakouts are less effective buy points. A lot of times they'll fail, and then you'll see something like a re-breakout where stock will then shake everyone out and then break out again. And I think that's because everybody sees them. And so to get an advantage by buying within the base, I think gives you a leg up on the competition, and is a huge improvement over just buying the base breakouts themselves.
Do you have any recent examples of a pocket pivot off the top of your head over the last couple of days?
Yeah, actually, if you look at Netflix yesterday, had a pocket pivot. And see, the other thing, a pocket pivot, as I was saying, there's two types. There's the one within the base, which is an early buy point, and then there's one that you use as a continuation buy point. Now, O'Neill's rules about adding to positions is, you buy the breakout, and then if it goes up so many percent, you add this much, and if it goes up another so many percent, you add this much. In this market, you'll see stocks break out, run up a few percent, and then boom, come right back to the breakout point. And my observation is that that can often leave you underwater. You've averaged up into a position as the stock's moved a little bit higher, and then a stock comes in very quickly in this type of environment, and you're underwater. And so you need to have a more concrete buy point to be adding to. And so the continuation buy point, pocket pivot buy point, gives you a very concrete way to add to your position. So, for example, Netflix had a viable gap up, I think, after earnings. Was it last month, I believe? Yeah. And it's moved higher since then. And yesterday it came up and off of the 10-day moving average if you look at a chart. Hopefully your listeners have access to charts right now. But you can see the volume pickup yesterday was slightly above average, but the stock came up and off the 10-day moving average, and the volume was higher than any down volume over the prior 10 days. We saw a similar move. So you could be adding to your position. We saw a similar position, or actually buy point in Facebook 3 days ago as it came off the 10-day moving average on what was a pretty good spike in volume right after they bought the WhatsApp.
Yep.
Yeah, I like the name of that. WhatsApp. And so that's where you'll see them. Others, I'm trying to find some others that were good examples. If you look at, say, Yelp, when it was in the base right around the way down there actually, right around, say, the 65, 66 area back in December. You can go back and look at that area. It's running along the 10-day and the 50-day moving averages. And it had a pocket pivot. It had a couple of pocket pivots in there. You can see a stock like Workday right around, let me see here, I think it's right around the 80 level possibly. Let me see this. Yeah, right around the 80 level, it had a couple of pocket pivots right along the 10-day moving average back in December as well. And these are actually early entry points because these stocks have moved higher
quite a bit,
since
yeah.
then. Yeah, and so you could get in much earlier.
So you sound
Definitely.
obviously very, very technical, but do you
Yeah.
throw the fundamentals in there at all? I mean, it seems like the fundamental trading.
Yeah, because you have to put it together with what I call what the big stock theory is all about. So I'm always looking for fundamental drivers, thematic drivers, and I think fundamental thematic drivers. The difference there is, typically O'Neill says with canceling you got to have 5 quarters of earnings up, 20% or whatever, and I think that's a little bit dated at this point. I think everybody has access to all that information. The market is a little more forward-looking, and if you look at some of the biggest winning stocks over the last few months, take a look at Tesla. It started out its move way down in the 40s last year, and it had no earnings, basically. You look at Yelp. Yelp is losing a penny or two, and that stock's had a huge move. Look at a stock like Workday, WDAY. That stock's had a huge move, and they're losing money. Look at a stock like Data, Tableau Software. That stock's had a huge move, and they're losing money. Look at a stock like FireEye. It's had a couple of quarters of decent earnings, but for the most part, it doesn't fit the model. Where O'Neill wants to see 4, 5, 6 quarters of strong earnings. So what comes into play there is looking more at other factors, like what is the potential for their market share, what's going on with their technology, how does that establish them as a leader, and basically where do they fit in what's going on in the overall economy. So an example, if you look at a stock like, Workday is involved with the cloud services, and the cloud is becoming bigger and bigger. FireEye, for example, is involved with security, network security, which is a huge issue, and getting bigger all the time now that Apple's announced that they're subject to being hacked into. And Tesla, of course, the electric car. You look at a stock like SolarCity, that was a huge winner last year, and they're losing money. But if you understand what they're involved in, helping to build these supercharger sites that Tesla uses to provide free charge-ups to their customers, you start to see the thematic basis behind some of the moves here and the forward-looking view that the market's taking. And I think that's dominated the old O'Neill method of looking at past earnings over the last few quarters. Everybody knows that. It's old information. So if you're going to get an advantage, you have to kind of be a little forward-thinking, and then technicals will lead you to where you need to get to, because the market is essentially a mass mind, and you use that to your advantage by watching what the market does and the individual stocks in terms of their price-volume action, because that's telling you what the investors are thinking in terms of where they're putting their dollars based on their best assessment, and it's the mass of investors doing it. So essentially it's a mass mind, and the technicals clue you into that.
Along the way.
And so I'm highly technically oriented, but there has to be a fundamental or thematic driver that I can get my hands around, get my head around, in order to have some conviction. I think Tesla, for example, looks a lot like General Motors of 1915, for example. And thematically, if you look at General Motors back then, the automobile back in the 1900s, Henry Ford came out with the Model A or the Model T, whatever, very utilitarian. And it wasn't until General Motors came out with the V8, the production V8 engine, where you now had power, and they combined that with styling, and suddenly you had a consumer product that caught everybody's imagination, and the automobile took off from there. If you look at Tesla, what have they done? They've actually improved on the whole concept of the electric car, because one of the glitches I always thought was, how do you charge these things up if you're on the road? And so they've sort of rethought the whole idea of creating these supercharger sites that their customers can go to and charge up in like 20 minutes, 30 minutes while they have something to eat or do a little shopping, whatever. And so, they're sort of rethinking it. We wrote an article in Forbes.com last year in June, and we pointed out the similarities on the technicals, believe it or not, of General Motors back then and Tesla today. And we hypothesized that Tesla would have a big move like General Motors did. General Motors went from about 32 to like 80, 90, so basically tripled. Tesla had a big move from around 40-something up to 194, and then it corrected. General Motors, after running up to 80, 90, it also corrected for several months and built a base, and then when it broke out, it went from about 80, 90 to 500. So what we see now is Tesla's just breaking out of its first real base since it had its move last year. And in similar fashion, I think stock could go well beyond 300, maybe even to 400 or 500 from here if the comparison to General Motors holds up.
Wow, that's impressive. You must be talking to your buddy at Morgan Stanley that slapped a 320
Right,
price
they
target onto them.
upgraded the stock today with a 320 price target. So.
Well, Gil, we got the $1 million question for you here today. The S&Ps, I mean, I think we're just at such a critical level here. Had all that resistance in the mid 1840s. Finally
Right.
busted through it yesterday. Get me in. Grandma was taking money out of her mattress, buying another breakout. We traded up to 1856 and change, and we sold off, closed, right at that old breakout area. Are we looking at a
Right.
breakout here or a fake out? What would you use to determine if this is really going to be another leg up in the market?
The stocks themselves. In fact, I don't pay attention to the indexes. I think they just lead you around by the nose. And I've seen some charts out there, people trying to compare today to 1929. But, the underlying conditions are not the same. And the indexes seem to be fairly volatile. And there has been a pattern of 5 to 7% corrections. The market suddenly turns back to the upside. We break out and make a marginal new high, and then the market will correct again. And maybe that does happen again. But I'm not going to concern myself with that because I'm going to be buying the stocks and watching what the stocks are doing rather than focusing on the market, what the market is doing. An example would be Facebook had a Bible gap up to the 60 level, right smack in the middle of the correction, and it's continued higher. It's now above 70, and so you had to be buying that buy point right in the middle of the correction, and on the day that the market bottomed out, which I think was about 3 Mondays ago, Facebook actually pulled back a little bit, but never violated that 60 gap up level. And it just continued higher. So if I tell people, just put up on your quote screen, try this as an experiment. Just put up the stocks that you like and that you're watching that either you own or you want to buy, basically that you're keeping an eye on. And just put those up on a quote screen, nice big ones, so they're in big letters so they really come out at you. And just watch those. Don't watch what the market's doing.
Okay. Man, I could keep you on here forever. Do you have another minute or two?
I do.
Gold. Gold rallying with the market here. That's not supposed to happen.
Yeah. Well, I think you're getting more of this correlation in assets that we were seeing maybe a couple of years ago when gold had its big move. I think there's a realization that QE, quantitative easing, is here to stay, and that the Fed is going to continue. But, they're still buying $65 billion worth of bonds every month. They still have interest rates near zero. So there's a huge amount of liquidity in the system. You're starting to see the money supply is actually, the chart I've looked at of the money supply recently is making new highs. So you have all this liquidity in the system. I think you're starting to see some inflation, so gold is kind of tipping you off to that. But I think what you're seeing is an inflation in assets here that is being driven by the realization that QE is here to stay, and so it's dragging up commodities as well. And so we're getting more of a correlative effect with the commodities and the stocks moving together, which is what was happening back in, say, 2010, 2011. And so I think that's what gold is telling you right now.
Okay.
I've been long physical gold, since it was around 300, so I'm still holding. I think
You're still holding. Okay, and just to end the show, what are some of the common mistakes new traders make? And along those lines, what are your tips for new traders?
Well, I think the big mistake to make is not understanding that it requires a lot of work, and you have to study the market assiduously and be on top of what's going on in the economy. You should be pretty well read in terms of understanding what's going on in the economy and understand that it requires some effort. It's not like, you can't approach it like you're a weekend gambler going to Vegas and you're going to make some easy money. You have to apply yourself and find a method that suits your psychology, whether it's value investing, which is good for people who are patient. I'm a very aggressive trader, so I like a technically based momentum sort of method, and stick to it, And I would say also learn to rely on yourself. It's great to subscribe to websites and learn from others, but ultimately, when it comes down to the decision-making, learn to do it yourself and to do it confidently enough that you don't feel that you need to rely on others to reinforce what you're thinking. You're going to make mistakes, learn from your mistakes, and move forward. And most of all, remain optimistic at all times because, as I like to say, the opportunity of a lifetime in the markets can happen every 2-3 weeks if you keep your head up and you're aware of it. So
Okay, Gil, thanks a lot for coming on. Gil Morales of the Gilmore
My pleasure.
Report. I worked with, the best with Bill O'Neill, giving some good insights into the market. Thanks for taking time out from your busy day. We certainly like to have you on again.
Definitely.
Thanks, Gil.
Okay. Take care.
Okay. Joe Young, I guess I have to compliment, Violin Maker. Thanks for, revealing Gil to us. And Joe, let's compliment Joe. He worked so hard lining up all these guests and everything. And good job, Joe.
Thank you very much, Joel. I appreciate that. Gil was pretty cool today, wasn't he?
I liked him. He's a smart
Let's
guy.
get him back on the show very soon. What do you say?
I agree.
Well, all right. Well, we will move on then to today's editorial headlines. The dream is over, people. At GS Elevator, the anonymous Twitter account that tweets kernels of venal wisdom supposedly overheard in the halls of Goldman Sachs was revealed Monday evening to have never worked in the building or for Goldman Sachs. The man behind the mask turns out to be John Lefevre, a 34-year-old bond trader who worked at Citibank for 7 years and now lives in Texas. Lefevre was almost hired by Sachs in 2010, but the deal fell through due to a non-compete clause. Frankly, I'm surprised it has taken this long, he said, when contacted about his identity. I knew this day would come. For those of you that are not familiar with at GS Elevator, he has about 625,000 followers on Twitter and has caused Goldman Sachs to institute a number of security measures, including not speaking in the elevator. Nokia has been accused of leaking data from Lumia phones that use the Windows Phone mobile operating system into overseas hands. A report at the Helsinki Times cited sources who claim that shortly after Nokia sold its Lumia phones to the Finnish government, it introduced its smartphones to someone else. The leaks were uncovered by the newspaper and come on the heels of surveillance whistleblower Edward Snowden's revelations last year. The paper reports that after seeing the Lumia handsets, the Finnish government the paper reports that after seeing the Lumia handsets, the Finnish government, including the Prime Minister, embraced them. At the same time, the data leak began, it explained. The world's most popular car is getting a major makeover to help it better fit in with the rest of Ford Motors' vehicle lineup. Ford's Focus Compact, which according to R.L. Polk & Company data was the global sales champion in 2012 and through at least the first 9 months of 2013, gets a Ford-like trapezoidal grille, an optional 1-liter EcoBoost engine, buttons on the center stack, and a standard rear-view camera. The revamped car, whose first iteration was introduced in 1998, will hit U.S. dealer showrooms this fall. Ford on Sunday introduced the 5-door hatchback Focus at the Geneva Motor Show. The 4-door version will debut at the New York Auto Show in April. In another automotive news, Alfa Romeo is coming back to the U.S. according to parent company Fiat Chrysler Automobiles. But most of the dealers who were promised the Italian sports cars will not be getting them, at least not this year. Fiat Chrysler CEO Sergio Marchionne says Alfa's return to America will begin with one model, the Alfa Romeo 4C, which will go on sale at the company's Maserati dealerships by the end of June. Fiat Chrysler spokesman Rick Deneau told the Detroit News that those Fiat dealers who will be getting Alfa Romeos this year have not been notified by the company. The U.S. Department of Agriculture will spend millions of dollars to help farmers and ranchers improve pastures in 5 Midwestern states to provide food for the nation's struggling honeybees under a program to be announced today. Commercial honeybees pollinate at an estimated $15 billion worth of produce each year. Many beekeepers bring hives to the upper Midwest in the summer for bees to gather nectar and pollen for food, then truck them in the spring to California and other states to pollinate everything from almonds to apples to avocados. But agricultural production has been threatened by a more than decade-long decline in commercial honeybees and their wild cousins due to habitat loss and pesticide use. Colony collapse disorder, in which honeybees suddenly disappear or die, has made the problem worse, boosting losses over the winter to as much as 30% per year. Sierra Leone's National Minerals Agency, according to Agence France Presse, says a diamond worth about $6.2 million was unearthed in the country's eastern Kono district. This 153.44 carat diamond is one of the finest diamonds to be found in Sierra Leone in the last 10 years, the agency said in a statement. Sierra Leone, one of the world's poorest countries, is still recovering from a devastating 11-year-long civil war that ended over a decade ago. Today marks the 50th anniversary of the heavyweight boxing match in Miami between challenger Cassius Clay and defending champion Sonny Liston. Theater Network.
Cassius Clay.
Cassius? Did I say Cassius?
Yes, you
Cassius.
did. Blasphemous.
Blasphemous Cassius. The Theater Network Television, or TNT, produced a closed-circuit telecast of this fight and carried it live at 10 p.m. on a Tuesday night. Well, yeah, right, Joel? Why didn't you say you guys are probably too young to remember this? And it comes full circle. The announcers on that telecast were Steve Ellis and former heavyweight champion Joe Louis. The production was shown in over 350 theaters and arenas throughout North America. Do I need to keep reading this, or is that
What's the
okay?
trivia question?
Today's trivia question. Well, okay, so today's trivia tidbit, as I mentioned earlier in the show, Harold Ramis died of complications from autoimmune inflammatory vasculitis, a rare disease that involves swelling of the blood vessels, said his wife, Erica Mann Ramis. He was 69 years old. Ramis... Ramis' serious health struggles began in May 2010 with an infection that led to complications related to the autoimmune disease, his wife said. Ramis had to relearn to walk and suffered a relapse of the vasculitis in late 2011, says Laurel Ward, vice president of development at Ramis Ocean Pictures production company. From that relapse, he never fully recovered. Ramis was quiet about his illness, but friends did visit, including brothers, castmates Bill Murray, from whom he'd been estranged from for almost 20 years, and Brian Doyle Murray, who appeared in 7 Ramis movies. After getting his feet wet on Second City and SCTV, Ramis as an actor was known for leading or supporting roles in Stripes, Ghostbusters, As Good as It Gets, and Knocked Up. He wrote and or directed Meatballs, Caddyshack, Stripes, National Lampoon's Vacation, Back to School, Multiplicity, Analyze This, Year One, several episodes of The Office, and Groundhog Day. Today's trivia question: what was Harold Ramis's first film credit? This also happens to be one of my favorite movies.
Was it one of them you mentioned or not?
No.
Oh, okay. While everyone is thinking of that, I will tell you that the camp where they filmed Meatballs at, I worked at that camp.
Oh, you did, huh?
Yep. Yep. All right, Jake's popping up here.
Jake thinks he has a guess. Brent, do you have a guess?
Not yet.
Not yet, because he's too busy Googling. What do you think, Jake? Jake got it right. It is National Lampoon's Animal House, for which he was a co-writer. Ramis drew from his own fraternity experience as a member of Zeta Beta Tau fraternity at Washington University.
I was a ZBT.
In St. Louis. Joel, stop trying to compare yourself. And working on a treatment about college called Freshman Year, but the magazine's editors were not happy with it. Ramis wrote the part of Bluto specifically for John Belushi, having met him at Chicago's Second City. Ramis originally wrote the role of Boone for himself, but director John Landis felt he looked too old for the part, and Peter Rieger was cast instead. That wraps it up for today's editorial headlines and trivia tidbit. Just a reminder, ladies and gentlemen, the show would not be possible without our friends at Options House. They'll give you 150 commission-free trades just for signing up for an account through this page. So go ahead, click on those buttons at the top and the bottom right. Open an account through Options House. Get those 150 commission-free trades just because you listened to Benzinga's pre-market prep. And now I saw Jake wheel over here really quickly. I'm assuming he's got some movers for us ahead of the... Oh, well, no, it's not ahead of the bell anymore. We've been open for business for 4 minutes.
Yeah, we got to catch up a little bit here, I guess. I figure I'd hop on the mic here and help you guys out. I do have a few stocks moving here in the pre-market that I figure we should hop into. I want to kind of start with some of the earnings plays this morning before we hit into some of the other names that are moving out there. Let me just get on my...
Just real quick,
Yep, go for it.
traders. I just, this $52 level here Boy, oh boy, oh boy, is this thing just begging to break out here. Dick's Sporting Goods got the little nod from the Saz Monster today. 52 we hit yesterday, 52 we hit today. Other highs at 51.86, 51.92, 51.88. Oh my gosh, 52. It's resistance for now. Major level for Dick's. Keep an eye on this one over the next couple days.
All right. Well, first off, for earnings this morning, I'm going to start up with Home Depot. I'm just going to go top to bottom here. Home Depot reported 73 cents versus 72-cent estimate. Well, revenues came in at 17.7 billion.
Oh my lord!
Missing the expectations of 17.99 billion. Let me see if I can get you any guidance there. Home Depot, that's Hotel Delta. The guidance for the fiscal year of 2014 was put in a range of 438 to 443. You can see how that compares to the street estimates. Looks like street is looking for 443, or yeah, 443. So little low there. Home Depot, what are you thinking of it?
Home Depot here. Boy, I would have rather seen it open at the $80 level and then go to 80.08, not taking any heat. But opened up. The paper kept it down a little bit. Opened up at 79.68. Got to sprint to 80. Got a few people in, hey, it's over 80, it's breaking out, and then vavoom, back under 80 here. I think the high of the day is in here in Home Depot here. Currently trading at 79.65, 5 cents off the low. S&Ps are falling apart. 78.25 would fill the gap.
All right, next up is Macy's, ticker Mike. Just M. EPS came in at 231 versus the 217 estimate. Revenues coming in at 9.2 billion, missing expectations of 9.28 billion. So Macy's, usually one of the strongest retailers out there, did very well on the bottom line, but not exactly where it was where they were expecting for the top. Joel, any thoughts on Macy's here?
Well, just real quickly, the lows got up to that triple top area at the 48.30 level, got to 48.31. So if you were quick off the hop there, you did catch the lows here. Looking at Macy's here, the S&Ps are just falling out of bed here. What do you guys, is there some kind of news? Get on that Bloomberg. You find me some news. What's going on with why this market is crashing? But Macy's is they hit this thing in the pre-market. And now it's come all the way back here. So kind of, wow, what a range for Macy's. Holy mackerel, 51.30. And then we just hit 54.90. This is all in the last hour here. I'm looking at that 54.90 high that it just made and didn't really have a good level there. 55.14 was the high on January 14th. So call that 55 the major resistance level. Makes another run up there.
Rounding out some of the biggest names this morning is Toll Brothers. Tango Oscar Lima is a ticker there. They reported their Q1 2014 results of 25 cents versus the 19-cent expected, and revenues were basically exactly what the street was looking at. So Toll Brothers, one of the more luxury home builders here, managing to beat pretty solidly on the bottom line and matching on the top.
It spiked to 39 here in the pre-market, and then came all the way down under 38 bucks. 37.72. That's 16 cents below the low from yesterday. So keep an eye on here. It opened at 37.80, ticked 7.72. So you got the opening there, providing a good base here, good support. I would like to see it clear the close here at 38.34. That's the level I'm looking at on the upside. Longer it takes to clear that close at 38.34, I think we may just come back down and take out that 37.72, perhaps the 3-day low at 37.46.
Now, if we're looking, as far as the home builders go, it's a sector that trades pretty closely together. We did get some economic data today on the home builders in general. The S&P Case-Shiller, the HPI composite came in at 13.42%, slightly beating expectations. The house price index quarter over quarter and month over month looks like they both beat. So, some of these indicators that can be, it seems like we're looking kind of bullish there. And the S&P Case-Shiller, just home price index as a whole, did beat. It came in at 165.69 versus expected 165.5. So beat pretty much on all of those indicators there. So that might be something to take into account if you're trading the home builders out there today.
Right. I mean, it's. I mean, you got a mixed market here. Brent just made a good point. We came off the near the end of the session yesterday, hit that 1847 level, 48, and you had a little, pocket down. Close at 1846, and then lo and behold, you get back up there this morning, and you're having trouble again. So this is just besides the technicals here, this is just a really important day for the market, just to clear and get back and close over 1850 here. I know Dennis was looking perhaps for a longer term swing trade here on the short side, just because we had to break out and turn into a potential fake out.
And as a heads up, at 10 a.m. we are getting the CB Consumer Confidence number. So since we're getting a lot of action in the S&Ps, I think that's really important to bring up, because we're going to get a good feeling for what consumer confidence is supposed to be at. Economists have it supposed to be coming in at 80. The prior report was 80.7.
Are you confident about the economy?
No. No, I'm not. But maybe I'm just a cynic. I don't know.
Okay. All right.
I guess we'll see. This should be interesting, because I think it's going to give us a good feel for, or at least it's supposed to give us a good feel for what the general public is thinking. I guess we'll see if it does or not. But with so much action in the S&Ps, like you've been saying, there's a lot going on this morning. A bad consumer confidence number would be kind of interesting to see where that takes us.
Hey, that Toll Brothers failing at the $38 level here, now back on, just made a new low of the day, or touched the low 37.72. So back at the open after a rally here. Toll Brothers better hold in here. We're going to be looking at the lower 37s.
Well, moving over to some of the other stocks that are on the move this morning, I guess one last earnings report that I'll do is Office Depot. Loss of 3 cents versus expected gain of 3 cents. That's a pretty big miss there. Revenues coming in at $3.49 billion versus expected $4.09 billion. So missing by quite a bit on the top, almost 15% on the top, and by quite a bit on the bottom line. Oscar Delta Papa is the ticker there. Let me see if we've got any guidance for you.
Nervous market here, Jake. Very nervous. They heard you weren't confident about the economy, and that took 2 points off the S&Ps. Home Depot, Office Depot, I guess they wish they were bought by Home Depot, opened up, had a weird one, opened up 465, opened up low, got a pop, couldn't even sniff the $5 level, and then now we're back on the lows here, 460, matching the low right here. One number to keep an eye on here, folks, 448, the low of the move for the issue on January 17th.
Well, I'm just kind of digging around right now to see if there's anything that could be hitting these markets right now, and I don't exactly see anything. This S&P K-Shiller came in strong. There were some comments coming out of the Eurozone. I don't know Moscovici. I don't know him too well personally. He does say he was noting that the Eurozone is suffering from a lack of demand. I don't know if that's really what's hitting it right now. I'm just trying to kind of take a look here to see if there's some news here. Maybe it's some currency pairs are just on a run or something like that.
No, I just think you just got just good old fashioned battle here. I mean, I think a lot of people put money to work yesterday, based on the fact that we broke out to all-time new highs, and the market likes to punish the most amount of people most of the time. So that's what you're doing. People that bought that breakout yesterday are definitely reevaluating their strategies here.
Yeah.
And just looking at Tesla here, oh my God, blowing people away, up $25. Morgan Stanley carrying a big stick here in the issue. Just made a high 244.33. All-time highs for Tesla. You're in that issue. Good for you.
Well, on
unless you're short.
Yeah, right. Jeez. On the Elon Musk name, Solar City was really taking a hit after the close yesterday. It hit a low of, I think it was $73, and it was recovering a little bit this morning, so it kind of piqued my interest. And now, lo and behold, it's in the green. I think it's maybe getting pulled up by Tesla. It's up 2.5% after releasing some numbers that really disappointed the street yesterday. So, guess Solar City can't really do anything wrong.
Gil made a good point with the with the correlation between the Tesla and the Solar City. The state. I mean, if there's going to be more of those Tesla Roadsters out there, obviously Nic Chahine won't be driving one, but they're going to need to get fueled up or get re-energized, and can't run on without getting charged. So I was looking at that correlation there. wild range in the issue here. As you pointed out, traded down as low as 73 even, and then we just popped over the $81 level. I'll just alert our traders that the high of 81.37 is shy of the pre-market high of 81.88. So if you want a potential sell zone there, 81.37 to 81.88.
Well, Jared seems to think that maybe there's just kind of a sell-off leading into the consumer confidence report, and Jared in the chat. And I think, hey, that might be pretty accurate there. And we're seeing the S&P in the red, Dow in the red, Nasdaq in the red. Hey, even gold and crude are in the red. Euro US dollar is on the rise, and the 10-year bond is in the red as well. Joel, what are you thinking for, I guess, the S&Ps for today?
I mean, I'm just sticking with that breakout was a fake out from yesterday, and that, people put more money to work in the market. They're going to flush them out, inflict the most amount of pain on people. And I was thinking about this when I talked with Dennis yesterday, at the end of last week, and we were talking about the book. And when I worked on the floor, and I used to hold a deck of orders, and the market always migrated towards the deck. And the deck was stacked on the upside. There were all those sells at the in the mid 1840s. There were all the people that were, okay, if it goes above 1840, I'm stopping myself out of the short. So the market gravitated the book. It cleaned out the book. So there's nothing left on the upside. There's no one left to sell. But now people that have shorted the market or feared, okay, well, I'm not going to buy the breakout. I'm going to want to buy a pullback. So now the deck is getting stacked to the downside here, and we'll have a couple days of consolidation, and see if this breakout's for real.
All right. Well, looking at this, I guess it's 9:46 already. So, shockingly, looks like we're towards the end of the show. So, Joel, I don't know if you've got any more insights you want to drop real quick, or if we want to close things down.
No, we'll see what happens with that 10 o'clock number. If you're looking for a preliminary number on the downside, if we go down 1837 was your intraday low from yesterday, and you really can't look for a steep sell-off until we take out Monday's low at 1829.25. Hope you guys enjoyed the show today, and we'll be back with you bright and early tomorrow morning.